Welcome back to another monthly market update. I'm Ryan Dean with Key Realty, and in today's video, we're going to do a deep dive into the July 2023 numbers the Columbus, Ohio board puts out for us. Last month, I talked about June typically is the peak for the year when it comes to appreciation and price growth. In this video, you're going to see if I was correct, if the same trend happened year over year that we've seen in the last 10 years happen this year or not. So we're going to see if the prices continue to go up or if they leveled out in June and came back down in July a little bit. It also helps us predict what's going to happen in the next few months. So it lets us know our price is going to soften in the next few months if you're looking to buy or sell. Kind of how to think about that as we dive into the numbers. We're going to talk a little bit about what the interest rates are doing as well, because that will obviously affect the market. I'm mostly going to look at the numbers here, so let's do it. All right, I've got the June 2023 numbers pulled up here for us to look. Again, this is accessible through the Columbus Board of Realtors. Go to their website. You can look at it yourself if you want to look at the data a little closer yourself. But you can see here the average price is $360 here in Columbus for July 2023. We had a little bit less sales, about 500 less sales than last year. So we're down 21%. Pretty common trend we're seeing this year, 20 to 30% difference year over year when the number of sales happening, just meaning that inventory is still down. We're still seeing low inventory. I'm also watching the end contracts. We're seeing the same thing with the end contracts. So we're probably not going to get relief anytime soon with the amount of contracts we're getting as well, as we always can kind of track what the next month's going to look like based on what's in contract. Typically, it takes about 30 days to close, so about a month later. I'm going to jump down to new listings. Also, is going to show us are we going to get more inventory or not? Probably not. Not a ton of new listings this last. Actually, quite a bit less new listings, down 15% as well compared to last year. But all right, the big question is: have we reached the peak of the market last month? Are we past the rise of appreciation for this year for 2023? And if you have been following along, and kind of talk about that every spring, we see this jump in pricing and then plateau in the summer, then come back down in the fall. So June's typically the peak. And if you want to compare the numbers to this month, the average prices, median prices, and average price per square foot, kind of those three I look at holistically to kind of see where pricing's going in the future or where it's been. So we're looking last month. Yeah, we came down. So as you can see, all these numbers are a little bit lower. The average price point is about 10 grand less than last month. So kind of just shows that, okay, yeah, I think we reached the peak. If we look down here in July, you're going to see this nice little graph that the Columbus board puts out for us. And we can see these little mountaintops every year for the last 10 years. Now we've seen this where we see a spike in the spring, peak in the summer, early summer, plateau, come back down the fall, come up, spike, we've come back down now. So we're on the downward trajectory of the rest of the year. And I think this is actually good news for a lot of people that are looking for houses. If you're looking for a house, this is actually good news, because a lot of times what happens is school starting. I think school starts this week, actually, as I'm recording this. A lot of jobs are just getting back in the flow. People have new shift in their schedule. All of a sudden, it's a lot harder to go look at houses. So we see this every year where as soon as school starts, it seems like the buyer demand just, kind of gets on pause. So if you're looking to buy a house, if you can manage to have the time and the ability to go look at houses right now, even though there's still not a ton of them out there, if you can go look at them, there's less competition right now than there will be most of the year. So this is a good sign. If you're looking to buy, you can actually think about things that might not be quite as competitive. You may not have to give an appraisal gap or even make as is offers if that's something that scared you off in the past. This, to me, is one of my favorite times to actually consider buying a house for those reasons. The buyers and sellers, if you're thinking about selling your house, there's still time to get top dollar. Just may not be quite as much as you would have gotten 3 months ago, 4 months ago, but you can still, if you price it well and understand the strategy of the summer and not think about the line. A lot of sellers have an issue with thinking this line right here, this spring market line, is going to continue to go up into the right forever and always, without understanding these dips here in Columbus, Ohio. This is always going to be market to market. Some markets are different than others. But our market here has an obvious trend every year that we see. And if you understand this as a seller, you can take advantage of this, knowing that, most people are going to continue to price it up here and buyers are expecting here. But if you can get a house that's priced well and get those buyers that are looking right now to come to your house and get the multiple offer still, you can still get top dollar. It takes a little bit more trust in the process, a little bit more just patience with this one, but it still can happen. It's just a little more difficult. You miss the mark, honestly, with timing. Doesn't mean you can't make sense to sell your house, especially if you're still looking to buy a house yourself. Because you just got to think about it. You're trading, especially if you're looking to buy a more expensive house, you may get a higher percentage off that more expensive house, even though your house doesn't sell for quite as much. And in fact, the higher end houses tend to come down in prices more and tend to take longer to sell because there's fewer buyers. And so in general, just with the higher end market. And so whenever you eliminate, the market starts to eliminate buyers, the high end and the low end tend to see the hits first, especially the high end. So if you're looking to upgrade and upsize or buy a more expensive house, this time of year could be a good time of year for you. So I'd love to talk to you more about that if you're interested. Yeah, the other things I'm noticing here are just, as we talk about that, I want to emphasize it's still a seller's market. The rest of the year is still going to be a seller's market. We're going to talk about interest rates, but even with that, I still think Columbus is going to be a seller's market. It's just not quite as strong as a seller's market as it tends to be in the spring. Pretty typical. Interest rates are going to, hamper some buyers and buyer demand. So as we just saw, interest rates ticked up again last week, and we see them on average over 7s now. Where I see it going, I've talked, listened to a lot of experts, and most of them see that maybe we may have one more raise and then slowly come down to kind of cruise into the rest of the year and then start coming down even more into next year. I've heard, this is the last rate hike. So I kind of anticipate either one more or none, and riding this kind of 7 and mid 7s out for a few months, and then slowly coming back down into next year, slowly coming down in the next few years, probably being within the 6s and taking a couple years to get into the 5s, slowly ticking back down. But the issue with that is that if interest rates do come down, buyers still aren't going to get a ton of relief because of the inventory so low. So if interest rates come down and all of a sudden more buyers can afford houses, that's just going to increase the demand. And as we know, supply and demand, more demand means that the prices are going to increase. So, it's really kind of a catch-22. If you can't afford the payments right now and you could get in a house, it may not make there's an argument to be made that if you can get in the house right now, that I don't see prices year over year. Now, talking about year over year, we're going to see prices dip here this next few months. So if you're looking to get something, if the prices were a little bit too expensive for you, we're going to see a step backwards, not a huge step, but a step backwards. We're going to talk about how much here in a minute. But if you can get in a house now and then refinance in a few years, you're not going to have that price increase jump once interest rates do come down, but you can change your price, your monthly payment still by refinancing and things like that, or recasting your loan. There's options. Talk to a good lender. They can talk strategy about how to kind of get you in a house now and get the lowest rate moving forward sooner than later. So with that said, I want to kind of talk about where I see prices going over the next few months. So if you come down to this chart here, we've shown you in the past, you can obviously see there's a trend, and the trend is that the appreciation seems to take off in the spring and come back down in the fall and winter. We've talked about this over and over. So you can kind of see just the natural, like if you look at the lines, January to January, you can kind of see June peaks, usually about twice as high, 50% higher than what we typically end up landing on by the end of the year. So it spikes in the spring, flatlines, comes back down to about halfway what it was in the spring. So the numbers kind of ring true if you go back and look at the numbers. If you go back to June, December, there's 22 of June, we're looking at 350 of the average price point to December. Where's December? I think December is actually back here. This is fine. So here's December 22 of 318. It's about 11% difference. Correct me if I'm wrong, but it looks like about 11. I did 21 numbers. It was around 9%, 8% difference. And so, really around that, like from June to December, we can expect anywhere from, a 5 to 10% appreciation decrease. And that's what I expect the next few years. I expect month over month prices to come down, especially with the interest rates getting a little higher. I see that being probably a little bit more towards the 11% side is what we saw last year when interest rates spiked up, and then we saw a pretty significant decrease there as well. And so I kind of see it doing the same thing this year, is around that 10%. And then, so month over month, maybe seeing, anywhere from 1 to maybe 3% appreciation difference month over month. With that said, I don't think we're going to see year over year price, decreases. I think we're still going to see this number up and to the right as a whole, especially since the decrease last year was pretty significant when it came to January up to June, then June down to December, January, then the following year. So I don't see month over month, year over year change, being drastic. I see it being slow and steady, anywhere from what we've seen this last few years, 4 to 5% month over month. And then, I think this number is going to come up a little bit higher. We're only seeing 3% year over year, 3 to 4% year over year increases thus far. So anyways, one thing I will say is watch out for those headlines that are going to start saying, here comes the crash. We see this every year where people start, seeing they focus on month over month depreciation, and they start using that as their, headlines to say prices are falling, prices are crashing. No, it's normal this time of year. Don't look at that. Look at the year over year and then decide. There was some year over year last year where we saw like I think San Francisco and some of the major cities had some year over year losses. And I think that was really our really big, kind of reset from now we have almost a whole year of higher, quote unquote, higher interest rates. I think we're kind of steadied out, leveled off of where this market's going. And again, I think I talked about if interest rates drop, I think those prices continue to increase even more. So that's kind of my thoughts. That's all I really have for you today. If you're interested in talking more about your situation or your location in the Columbus area, as this is just a big snapshot of the Columbus market. We'd love to talk to you about your area, your specific area, if you're interested, or just want to know more about your specific house. If you want to know what's going on with that, always happy to have those conversations with you to kind of give you an idea of what your house may be worth on paper, and that kind of stuff. So if you have any real estate questions, actually, I'm happy to talk to you. Give me a shout, send me a text, email, happy to talk. Thanks again for tuning in. If you found this video useful, please like us and also share this with your friends that you think may find this helpful as well. Again, I'm Ryan Dieter with Key Realty. Feel free to reach out if you have any questions, and I'll see you next time.